Texas is one of the U.S. states that imposes a sales tax. Here are the key points you should know when collecting and remitting sales tax in Texas. Number 1, sales tax nexus. If your business has a physical presence or economic nexus in Texas, you're required to register with the Texas Comptroller of Public Accounts and to collect and remit sales tax. That link is below in the description. Number 2, the Texas state sales tax rate is 6.25%. However, with local taxes, the total can be up to 8.25%. Generally, sales tax is collected at the business address, which is often referred to as origin, but in some situations, sales tax should be collected at the location of service performance. Number 3, taxable items. Generally, retail sales of tangible personal property and certain services are taxable in Texas. However, there are exceptions. For example, most groceries and prescription drugs are not taxed. Sales tax permit. Number 4, before you can collect sales tax, you need to apply for a Texas sales and use tax permit. This can be done online through the Texas Comptroller of Public Accounts website. Number 5, filing and remittance. Sales tax returns and payments are generally due on the 20th of the month following the reporting period. However, the specific date can vary depending on the type of seller and the amount of tax collected, as well as when certain holidays fall. If it's on that day, the 20th, it may be different. Number 6, local sales and use tax. In addition to the state sales tax, local jurisdictions in Texas can impose their own sales taxes. So if you're required to collect sales tax in a city, county, or special purpose district in Texas, you'll need to account for those local taxes as well. Now, these are remitted to the state of Texas directly. There is a single local seller's use tax rate that remote sellers can use instead, and it's currently 1.75%. Now, if as a remote seller you choose to collect this single rate, you must notify the comptroller's office in writing. Number 7, online sales. As of 2019, Texas law requires out-of-state sellers to collect sales tax if during the previous or current calendar year they have a total Texas sales of taxable items of $500,000 or more. Now, to terminate the use tax collection responsibilities in Texas, a remote seller must have 12 consecutive months where total revenue of all sales is less than $500,000. Number 8, resale certificate. If you purchase items for resale, you can present a resale certificate to your supplier to buy the items tax-free. However, you will then need to collect sales tax when you sell the items to the end customer. Now remember, sales tax laws are subject to change and the specifics can be complex. Sales tax rates are updated in Texas on a quarterly basis, and these updates are posted to the comptroller's website. Always check the Texas Comptroller of Public Accounts website for the most up-to-date information, or consult with a tax professional to ensure you're meeting all of your sales tax obligations in Texas.